What's going on, apes? Welcome back to the channel. We have to talk about something very important that all apes need to stop doing if they want to see this mother of all short squeezes. Now, by doing this, we are essentially giving the hedge funds, institutions, and market makers free capital by buying super far out the money call options that essentially have no chance of going in the money. This is free money for these market makers, specifically Citadel. So we need to talk about this, what is going on, how this does work, as well as provide you guys some insight of what you can do that will help the movement as far as options and stock. Now, this video was actually inspired by a comment on a video earlier in the day. Stephen S said, "I wish everyone would leave options alone. I believe that's what's killing the momentum." 11 people liked this comment. So then I did go to the community forum and I said, hey, I know I've made a couple of these videos. Nobody else is talking about this. Do you guys want me to make another video addressing this issue? 84% of you guys said make another video. 16% of you guys said don't make another video. So I think it's overwhelmingly clear what should be done here. So we are going to be making this video, guys. The only thing that I ask is that you hit that like button for me, and this is a very important video that really should get out to all apes because they are losing money and they are giving the hedge funds, institutions, and market makers free capital, potentially delaying the short squeeze. Every single week this is going on. So let's get straight into it, guys. And this obviously, like I said, revolves around the option chain. Now, it doesn't necessarily matter what expiration date you're trading options on. The biggest key here is a lot of people are piling in to really these $100 strikes to $145 strikes pretty much on every single expiration week or day. We have the highest amount of open interest on these 145 strikes. The next second highest is at $100. Now, just so everybody is fully aware of what buying a call is and how the market makers are on the back half of this, we got to break it down for you guys. So say you are buying a $90 call, $90 strike for July 16th, you're paying $51. So you give that $51 to somebody. In this case, most of the time it's going to be market makers. If you have 100 shares of a stock, you could sell a covered call and you would be essentially on the other end of that trade. You would be somewhat of a market maker. Now, with that being said, when you are buying this, like I said, you're giving up $51 for the right to buy 100 shares of AMC at $90 per share by July 16th. Now, what happens if you sell a covered call and the stock price never gets to the strike? You keep that free money. Now, this is what has been going on the whole entire option chain. The market makers, especially Citadel, they are the largest market maker. They are taking all this money you are giving them and they don't have to do anything with it. They're not buying the shares. You're obviously not seeing that being reflected in AMC's share price. You're not seeing a gamma squeeze. That is because so much money is going to these contracts that are so far out the money. Specifically, like I said, in between $100 and the $145 strike, they are keeping all of this money. Now, for an even better perspective, what is going on behind the scenes as far as the market makers? Now, their job, like I said, is to provide liquidity to the options market. When they are agreeing to sell you 100 shares at, let's say, the $90 strike, yet again, they do not have to buy the shares as soon as you buy the calls. Now, yes, they have to sell you those shares at this $90 strike if it gets to $90 by July 16th, but they are not going to buy the shares at the current share price. Now, that is where you see delta hedging going on. That is essentially a fancy word for saying that the market makers buying shares to sell you the shares at these strikes. That is where you see once you do pass critical levels, like last time we did see the $20 strike, the $40 strike, that's where you see a lot of buying going in, and we essentially gapped up from, I believe, $33 all the way to $70 because you've seen a huge gamma squeeze where a lot of these options that the market makers were a part of on the back end had to start buying the shares. Now, for an example, just think about this. If AMC stock did start to go to $90, let's say it went to $87, they would start buying some shares to actually sell you those shares at $90. So at least they make money. Now, what do you guys know about the casino? No matter what age you are, you know the casino always wins. The house always wins. That is essentially what is going on in the options market. You are giving them all this money. They are not buying the shares. It is not helping the movement whatsoever. Now, me personally, I do want to buy more options in this once the squeeze actually does start, and that is where you will help the overall gamma squeeze, even if they are these strikes are further out the money, because there will be an even bigger implied move for the stock. So you will see more hedging going on, but ultimately, until you get close to these strikes, you're not going to see any of the shares being purchased to actually sell you these shares at these higher end strikes. That's why we're seeing a lot of liquidity flowing out of AMC, especially because a lot of people are buying these contracts that are in between $100 and $145. Now, none of this video is financial advice. I'm not a financial advisor or a financial planner. Keep that in mind. This is only a random guy on YouTube telling you what nobody else will tell you, and quite literally, I have not seen a single video about this, but this is the most important thing that is really hurting the AMC movement and the short squeeze, because you also got to think about it in this way. If these market makers, specifically Citadel, they have a short position of about 58 million shares of AMC. They're down about $900 million last time I did the calculation. Now, if they are getting, let's just say, $20 to $40 million per week per expiration date just by doing this, do you think they're really going to cover their short positions? Probably not. And now, me personally, I am not buying any options until we start to see either the shorts covering and the short squeeze, or start to see a gamma squeeze. I am not going to get caught catching a falling blade in the option chain like we have been seeing, and I also don't want to put any money into options, which would help a lot more with the overall movement, just buying the shares with them. But if you're somebody like me that will play the shares obviously, but options as well once this does start to squeeze, then I do think getting in between the $50 and $60 strikes will be your best bet if you catch this right at the tip, right once we start to short squeeze. This will be where you will get the most opportunity and ultimately help the overall gamma squeeze, and then ultimately lead to even more shorts having to cover their short positions. But like I said, I am only a random guy on YouTube that owns about 300 AMC shares, looking to buy some options only once we do start to go through a gamma squeeze or a short squeeze. So take this video with a grain of salt. I'm not your financial advisor. Most of us live in America, so you are free to do whatever you want to do. I am only giving you guys the facts here. Now, if you like the video, hit that like button for me and help push this video out to even more people, as well as comment down below and consider subscribing to the channel. Now, if you also want to get up to $70 in your choice of free stock, check out the link down below for public, no deposit necessary, and no need to even link a bank account. You get your free stock in about 3 minutes time, and it is literally by definition free money. As well as deposit $100 with Webull, get 4 free stocks, each of them potentially worth up to $2,400 a piece. And there's also a setting in Webull where you can turn off the availability for Webull to lend your shares out to other hedge funds or institutions without you knowing about it. So that is why I do have those 2 links. And like I said in the video already, if you guys want to start winning on your options trades as well as long-term investments and crypto trades, check out the link for the buy and sell alerts. Join a great community of about 40 members strong. This source is great information all day long. But with that being said, let me know, it is very important, you guys, let me know what you think about this in the comment section down below. But that's all for this video. I will see you guys in the next one.